Good afternoon, good evening. This is Brian for TimingStrategies.com, Thursday, October the 18th. Okay, today, just in a nutshell, we closed out our short position and went flat. We did not buy, we did not do anything except go 100% to cash on our end-of-day RIDEX system. Reason for that, which looking at the futures presently down about 4.5 points, looks like the market might have a little more downside to it coming into tomorrow, but that's okay. We have to protect the gains and profits that we have. What we look to make is about 1 to 2% a month, sometimes if we're lucky 2 to 4% a month. But what we're looking to see here tomorrow, if we get a move below today's low, we got another inside day. We're getting a lot of those. Outside day, inside day, below this threshold, and it shouldn't stay there for very long. So what we're looking to see, if we get a trade below today's low tomorrow, a move somewhere down to that level of about 152 on the spiders, maybe even if we're lucky and we get a gift, as deep as that 150 half threshold on the spiders. So at least back down to that level, maybe somewhere to that 55 bar average. If we get a move down into this level at about 150 half, into that regression trend channel right there. We've got a trend regression line that just kind of follows the trend so far on a median price basis. If we can get it to take out that low of right around the 25th, 26th of September and hold that line and close above it, baby, we're going to be getting long, big. We'll be going probably 100% long at that point. We'll see. I don't have any big expectations for tomorrow. What I do want to put on here is the banking index, BKX. Big basket of turds here. I tell you, man, don't step in this thing because you never get it scraped off the bottom of your shoe for a long time. We're looking for a wash of this area right down below the 16th lows. Wash out about the 100 mark level. Take out those lows, and if we can get it to take out those lows, trade below there, maybe on a deep one-day wash, and then trade back up. We will absolutely be a buyer of the market. Not necessarily the banking sector, my friends, that's for sure. But we'll be buying tech, we'll be buying Nasdaq, we'll be buying basically 2 beta ETFs up to at least 100%, maybe as high as 150, even 200%, depending how deep the wash is. We're only looking for a bounce. Again, this market, in my opinion, is not healthy. If you listen to, Rattlesnake George or anybody else talking on TV as far as how strong the economy is and how the fundamentals are strong and everything, well, we wouldn't need a $100 billion bailout fund for Citigroup. Point of being interesting, Citigroup, wowee, fundamentals sure are strong there. We sure wouldn't need a bailout for Washington Mutual. Wow, that's really strong there. And we certainly wouldn't have problems with all the other banking stocks like I mentioned earlier. So, look for one more big wash. If that happens, that takes us on the spiders or the SPY to right about that level. If that happens, we'll look to be a buyer. But again, I'm of the opinion that, we'll see it, take it one day at a time. But, what's really happening here is it's not a matter of the stock market and its underlying fundamentals. It's really just the dollar index, because our dollar for the year, let me go back a little bit, for this year 2007, we're down almost 10%. If you look at the S&P, it's up about 8% for the year. All right, so just do the math. When you devalue the currency by 9% and the stock market's up 8%, what's really going on? Well, what it's really translating into is higher oil, because oil, my friends, it's not down 9%, it's not up 8%, it's up almost 50% for the year. And again, that's a function not of the bad guys in Iran or Iraq or Turkestan or Yakaflakistan or anywhere else that's going on. It's really just a function of the people that have been in charge or put in fiduciary responsibility for our currency to maintain a stable, strong currency. But, that's anything but the case. So a strong dollar policy which if this is a strong dollar policy, I hate to see what else they got in mind when they decide they don't want to support a strong dollar policy anymore, is really the result of what we're seeing in the overall market. And it gets to a point where the Fed, in my opinion, has to either let the dollar completely collapse, because enough of this death by 1,000 cuts wondering when it's going to turn around. We're already at new all-time historic lows in the dollar. And if the dollar goes much lower, Asia, Europe, Latin America, Latin America, but the other countries, they're just going to start puking up our bonds. They're going to start saying no more dollars, thank you, we've had enough, no thank you anymore. And what happens is the Fed basically puts itself out of business by trying to support a financial market going into a political election year. And when that happens, when the Fed goes out of business, the Treasury goes out of business, and they lose what little credibility they even have left. So my opinion is that if we do get a bounce on this area, we want to buy it. We want to buy it heavy for a very strong, rapid resnap. But then, more and more, I'm looking at deflation coming in, because we need a little more deflation to keep this thing going longer. Because if they just keep trying to push the market up based on devaluing the currency, debasing the dollar, sooner or later it's just going to fall apart, and we won't even have a stock market. So I really believe the deflation scenario is more of a likelihood. The lower and the lower the dollar goes, the more likely, the deflation scenario is the either only alternative or hyperinflation. And I don't think we can afford hyperinflation, so that's about it. Not a whole lot, but like I said, we're flat right now. We took off our intraday ETF positions, basically break even. We closed out our RIDEX positions end of day, and we're sitting flat in cash, 100% money market, looking for one more wash down to here, maybe one more test of that regression line, and then we'll take it day by day. If we don't get it, if that scenario doesn't play out and the market basically just takes out that low, or even takes off above that high, well, then we'll be a buyer of about 30 to 60%, depending on the strength of the takeoff, and we'll go from there, but we'll keep you posted day by day. There will be no commentary for Friday, October the 19th. I'll be out of town, but I do appreciate your comments, responses, emails. Please drop us a line at timingstrategies.com. And again, this is Brian for October the 18th.